Most people know these three terms: investment banking, private equity, venture capital, and they assume they all do the same thing. But honestly, they don't. In fact, if you enter one of these careers, your day to day work could look completely different. I personally worked in investment banking for 3 years, also contributed to private equity firms on helping their fundraising and deal execution. So here, if we try to understand, some professionals help company raise fund, which is investment banking, some buy companies, that is private equity, and some invest in startups, which is via venture capital. And if you are planning a career in finance, understanding the difference is extremely important, because choosing the wrong path could mean spending years preparing for something you don't actually want. Hey there, I'm Karan, an ex-investment banker turned founder, and through Encoding Careers, we help you break into investment banking the right way. So talking about this video, we'll break down what investment banking actually is, what private equity is, what venture capital is, and then we will understand what juniors do, what mid-level professionals and senior professionals actually do in these three types of industry. To understand it in simple manner, we will take real Indian deal example to connect everything together so that it makes sense what each of the industry is doing separately. So let's start by understanding what is venture capital. Now, understanding it in a simple sentence, venture capital firms invest in startups. Now, startups are companies that are just starting out their business. Now, startups also have a lot of phases. It might be at the idea stage where they have just an idea about giving a service or building a product. They might be in early revenue stage where they have some revenue coming in from the product or service that they sell, or they might be in a growing stage where they already have revenue coming in, they have a set business model, and now they want to grow their business. Here, venture capital firms are taking high risk by betting upon the startups at different level of phases, because here the risk is high, the return expectation from these startups is also very high. So here, venture capitals are investing into companies before they become mature, right? So taking an example of Zepto, here when Zepto was not having long history of being into the industry and quick commerce was also very new at that time, they were burning good amount of money on a monthly basis. They were going very rapidly because the quick commerce industry was booming at that time. Now here, investors that would come and put money into these kind of businesses, which is like very early in their stage, who is just starting to make money but growing rapidly, it's best for VCs to come into the picture. So at this point of time, when Zepto was in this stage, growing into this quick commerce industry, investors like Y Combinator, 2AMVC, Founder Growing Club, which is FGC, all put in money into Zepto, betting that quick commerce industry is going to be there in India for a long period of time and it has demand rising in it. So they are betting upon Zepto for a long period of time. And here, because of the growth that they have, they are seeing it can give them exponential returns since they are betting in very early into it. Now let's understand what are venture capitalists doing into this industry. So starting at junior level, they are mostly researching startups, like which startups are there, which markets can we enter into, what industry is growing at a fast rate, what players in this industry are being sustainable, generating revenue, not having a lot of losses. So all of these metrics are being considered at the junior position. You are also mapping it against competitors, like if there are 4 players in the industry, which one would be the best to bet upon, right? Because you are looking from a perspective of investment you are going to give to these companies. Once you are analyzing these players out there in the industry, you are creating investment memos, where these are documents that have everything about a company that you have analyzed, what are the competitors, why you think that these companies might be good for investment, and then these investment memos are submitted to your seniors for review before you directly give them money. So you as a junior person are going to assist in this due diligence process, where you are reviewing their financials, seeing that everything that the startup mentioned about them, that we have this amount of revenue, we have this amount of profits, is matching as per their financial statements, as per their filings, right? So that is all due diligence process. It happens upon financials, it happens upon operations, it happens upon the consumer side. But if these are startups, they might not have a very rigorous due diligence. It happens rigorously in bigger companies, which we are going to understand when we come to private equity. And alongside that, once the investment is made, you are then tracking your portfolio companies to whoever you have given money out, like what are they using this money for. You take upon these founder calls, like what are you planning to do down the line, so that you are always updated about what are portfolio companies doing with your money that you have invested. Now that is at a junior level. Now when we move to associate level, you are meeting founders. So all the investment memos that these junior guys are creating, you at an associate levels are taking action upon it. If you found that these companies are worth taking a bet upon. You start meeting their founders, you evaluate their business model, like how much will the business earn like next 5 years, next 3 years, is the industry really growing, right? Is there demand in this industry? Then you build investment thesis for your entire fund. Which industries do we see growing in the future, right? And then you give this investment thesis to your junior people so that they can start scouting out businesses. So at partner level, you are sourcing a lot of deals. You attend a lot of events. You are part of networking groups. These startups are coming in. They are pitching them. You are building that relation. Now for that, whatever investments are being presented to you by your associates, by your analyst, you are trying to understand which would be the best company to give money, and then you are also having conversation with those founders, negotiating upon valuation so that the funding goes through and you start earning returns from those startups. Now that is all part of one executing and doing investment, but the very important part is also raising funds for your venture capital, and that is also happening at partner level. Now after VCs have put in money into a startup, once they grow, they need bigger capital to grow even further. So this is where private equity comes into the picture. Now private equity firms are buying established businesses. They are working upon improving them, and further they sell them at higher valuation from what they had bought it. Here private equity players are not having expectations of earning exponential returns like a venture capital, because a venture capital takes a lot of bet into a lot of small startups by putting in small amount of checks. They are expecting that 1 to 2 startups take 100x return for them, but in a private equity they are not taking these hundreds of bets. Instead they are taking 5 to 6 bets a particular year and expecting a returns that is over and above the market returns, which they can then provide to their investors. So here, instead of funding a startup, a PE fund may acquire a profitable manufacturing company, a good healthcare company, a consumer brand, and then they could focus upon improving performance. Now since we have mentioned that private equity might take a 5 to 6 bet depending upon the ticket size that they invest, they will try to match the portfolio companies that they have. So for an example, if they are having a healthcare company, they might think of buying one more healthcare allied company that can be fed into these healthcare companies, and then both can realize some synergies out of it and improve performance for both of them. Like, it's not compulsory that they might always find synergies in portfolio companies. If they find a good company which is growing fast and need that money, so that is also where they can take a bet. So taking example of Zepto once again over here, since after it raised money from Y Combinator to AMVC, it started growing fast. It was growing very rapidly into a lot of cities. It started opening more dark stores, and then it needed bigger check size. So initially it raised around in 20, 30, 50, 60 million dollars. But now once it has started growing, it needed money like 200, 300, 500 million dollars, which was not VC friendly. Now they needed money from private equity players. They went on to raise money from General Catalyst and Avenir Growth Capital Partners, where the investors who have put in money into Zepto can encash the returns out of the entire business. So that is how private equity players work. So talking about the work role that happens at each of the stage, let's starting with junior position. Here, similar to VC, the analyst and junior people are working upon investment screening, which are the companies where private equity players can take a bet upon. They are working upon their financial modeling, creating a valuation range so that the senior people and mid-level people can have discussion with these companies upon the entire valuation and getting them acquired. Alongside that, they are also participating in due diligence similar to VCs, where any company that is being acquired or being invested in, and finally portfolio tracking as well. Wherever money is being put, make sure that the investment amount is utilized well. So that is at the junior level. At associate level, you are now working upon getting the deal executed. So when we talk about private equity players, they are giving big amount of money. So here a lot of parties get involved, like lawyers, consultants, and other parties to make sure that the execution of the deal goes through very smoothly. And here, after getting these companies acquired, they are starting to do operational improvements into these businesses. So they will make sure that whatever portfolio companies they have, they will try to understand if the synergies match across some companies. They will try to search through their networks to understand if there can be any cost reduction that can be made, if any improvements can be made on the revenue side of the business. So all of those operational analysis would be done so that they can start earning good amount of profits. They can reduce the cost, and at and after a point of time they can get higher valuation by selling that company. And finally, at a principal or partner, which is the senior position in a private equity player, you are sourcing acquisition, right? So the junior people definitely do that, but principal and partner people have very good connection in the industry, so they are directly having these founder meetings. Instead, where you are at junior position, you have to first do the outreach, you need to first build that network, build that rapport with the people that you are reaching out. And but when we talk about principal and partners, they already have that reputation in the industry, they have been working in the industry for a long period of time, so people give them time directly. Now once that acquisitions are being sourced, and they need to start having this negotiation about doing the transaction, right? So valuation side is the most common thing where most of the buyers will fall off if they are not getting that valuation that they are looking out for. So here principal and partners, which are the senior level people, try to make the clients comfortable first. They'll make sure that they understand about how this entire private equity will help them grow. So these guys have to be these guys have to be very very good salespeople, and on it's not manipulative, but it's giving right understanding at right point of time. Then they also work upon the strategic side of the entire fund, on which companies to target, which industries to grow into, how the exit planning should be done for the portfolio companies that we have. And then they are also working upon raising funds for the entire private equity, right? So that's how the entire hierarchy of private equity works. Now we have already discussed about venture capital and private equity, who are putting money into companies out there. Only difference is where they are putting money. VCs are going into startups, private equity are going into mature businesses. But here's how investment banking will come into the picture, and they are helping both of these companies work upon their businesses. So when we talk about investment banks, they help companies in raising funds, they help buying companies, selling companies, they help companies to go public, buy an IPO. After going for an IPO, it helps in other public fundraising options like FPO, rights issue, etc. And it also helps in executing strategic transactions. The venture capital and the private equity are in need of someone who could help them in buy companies, because both are looking out for strategic investments to be made. Both are looking for raising capital. So investment banks can help them raise capital for their own funds. And after a point of time when private equity wants their companies to be exited by an IPO, investment banks can help them do that. When VCs want to sell their portfolio companies, they can help by selling it to a private equity player or a bigger VC. So investment banks are like a middle person who will work with VCs, with private equity, and can help them get their business done. So as we have taken example of Zepto, now that private equity player wants to exit from this Zepto business, they are looking to go for an IPO, and there are so many investment banks that are helping, that are working upon Zepto's IPO to get done. So here we saw how entire Zepto business moved from a venture capital to private equity, and now investment banks are helping it get an exit. So each of these parties work in integration with one another. It's not a competitor. They are not doing the same work, as we have understood the differences of all the three. So now that we are talking about investment banking, let's understand how the junior level, mid level, and senior people work in the industry. So as an analyst, you are working upon getting the deal executed. Since you are supporting buying of companies, selling of companies, raising of funds, you need to create valuation models, you need to create pitch decks, you need to understand industry, because you need to do a lot of competitor analysis to make sure that whatever valuation you are putting out is up to the mark. This is what happens at a junior level position. As you move to mid level, like an associate or an AVP, you are now reviewing the work that your analyst have done. You are also managing the process of the entire deal. Now we all know that investment banking works upon tight deadline. If the client has given 1 month as a deadline, then you need to make sure that the entire process happens in 1 month. So you at a mid level is making sure that the work that analysts have to do is being done. Then you are also coordinating with investors. You are participating in meetings which happens with the investors, right? So as we know, you are working with VCs and also the client. So you are going to go to the meetings, what the venture capitals are saying, what the clients are saying, because here you are not putting any money of your own. You are just making sure that the deal goes through, so that whatever the entire transaction amount is, you make fees upon it, and you then work upon the next transaction. So all the negotiation work on both the parties to convince them to get the deal done is what your work is going to be. And now talking about the senior level people, they are the ones who are bringing in clients into the investment bank, and the junior and mid level people are getting the execution done. So they are winning mandates, they are keeping the investor relations, so that whenever the deal has to go through, So they are mostly focused upon generating revenue, because we all know for a fact that investment bankers earn a huge bonus upon the revenue that they are making. So now if you are giving a thought about which career is going to be right for you, VC is going to be right if you enjoy startups, innovation, founder conversation, emerging industries. Private equity if you enjoy investing, business strategy, company analysis, ownership mindset, and a long-term visibility. But private equity and VC are directly not easy to enter into because they have a high barrier to entry. And you can choose investment banking if you enjoy deal making, short-term deal periods, fast-paced work, valuation, fundraising, M&A. If these are all your liking points, then investment banking would be a good place to be. So if you're trying to figure out which path is right for you, investment banking, PE, or VC, we have created a detailed checklist where you just need to enter the scores that you think for every question given out of 10. And once you total up, you will get a total score which you can compare across the three. And the most suitable industry will have the highest score, which will help you understand about your next steps. So if you want my support or our team support on understanding your next step for career into investment banking, please feel free to book a one-on-one call via link in the description, and we would be happy to map out a roadmap for you. Hope this video added knowledge to your understanding about the three career paths that are out there, which are very much confused by a lot of people, and this video gave you clarity upon it. So if you like this video, make sure that you like, subscribe, and comment your suggestion for the next video. So yeah, that is it for this one. Until then, this is Karan taking your leave.